Types of industry-specific applications. Insurance. Insurance software solutions help deal with several challenges insurance businesses commonly face, for example, managing policies, clients and insurance proposals. These solutions provide an efficient, secure online platform to assist insurance providers in dealing with billing and invoicing, contract, policy management and claims procedures. In addition, these products also allow insurance providers to manage sales functions, track agent performance and mitigate risk. You can use these products to research and find insurance providers, gather, create and securely sign digital contracts and policies, keep track of and manage payments and perform other related tasks. Underwriting management function. Underwriting is the process of selecting certain types of risks and rejecting others so that the policies issued by the insurance company will produce the company's desired results. The underwriting department is usually made up of many individual underwriters who make the decisions about whether to accept or reject the applications sent in by agents based on the company's standards and their own judgment. Policy issue and administration. After the underwriter has approved a new application or a change to a current policy, a whole series of events takes place. A policy analyst or screener checks the application to make sure that all information is correct and complete. It then goes to a rater who computes the premium to be charged. The policy forms can be printed by computer or assembled using pre-printed forms with specific declarations and endorsements unique to that risk. Claims management function. The claims department sees that the company's insureds are adequately indemnified for their losses. Claim adjusters or representatives are used to inspect a loss, determine whether there is coverage for the loss, estimate indemnification, and in some cases, pay for the loss immediately. Large companies have their own claim adjusters, whereas smaller companies might use the services of independent adjusters. Actuarial and statistical management function. The actuarial and statistical department is the numbers department. Using the tremendous amount of data generated by computer, together with statistics available from other companies, actuaries determine the rates to be charged for various types of insurance. Accounting management function. As with any profit-oriented business, the determination of financial condition is a very important function in an insurance company. However, insurance companies must place special emphasis in this area because their finances are closely regulated by the states. For example, premiums must be credited to specific accounts, agents must be paid commissions, and proper reserves must be maintained. All these functions are handled by the accounting department. Investment management function. The investment department oversees the funds the company needs to invest to make sure that adequate funds will be on hand to pay claims. The investment department attempts to maintain a healthy rate of return while maintaining the safety of the investment. Because money must be on hand to pay future obligations, highly speculative stocks are not appropriate, and at least some of the investments must be readily convertible to cash, as needed. Legal management function. Because insurance policies are legal contracts, it is not surprising that insurance companies maintain a legal staff. This department interprets the various state insurance laws and helps the company keep its policies and practices in compliance. A key role is the department's involvement with court cases arising from claims. The legal department is instrumental in helping determine fair indemnification for insureds and is also involved in the company's other legal actions. Audit management function. For certain insurance coverages, a premium is determined after or during the policy term, instead of at the beginning of the policy term. These after-the-fact premiums can be based on several factors such as payroll, number of employees, or amount of receipts. The audit department checks the accounting records of these insureds at the required intervals to obtain the necessary information used to determine these types of premium. Loss control management function. Whereas an insured is glad when insurance pays for a loss, he or she would rather have no loss at all. Therefore, prevention and control of losses are very important aspects of the insurance business. The loss control department, or engineering department as it might be called in some companies, inspects factories, certifies boilers, and makes recommendations to insureds as to how risks can be avoided or reduced. Agency management function. This department works very closely with, and directs the operations of, the agents who represent the company. Its responsibilities include recruiting, appointing, and training, especially if an agent will be an exclusive agent. The department must monitor the sales and marketing efforts of these agents and make sure that the number and quality of agents are closely tuned to the market the company serves. Reinsurance management function. Insurance companies often purchase insurance to cover their own exposure to loss. This is called reinsurance. Reinsurance helps protect insurance companies from catastrophic losses and from wild fluctuations in underwriting results. This coverage can be obtained on a policy-by-policy basis or based on a whole block of policies. The reinsurance can cover the initial insurer for losses above a certain amount or can call for losses to be shared on a pro rata basis. Examples of insurance industry software providers: Salesforce, Microsoft, SAP, Guidewire, Verisk Analytics, Oracle.